All right, y'all. In this video, we're going to go over um, a U.S. legal way to use options to hedge off either a position you've taken or to just hedge off your overall portfolio. You can do this with Bitcoin and ETH. So if you want to do some of your alt positions, I've been trying to figure out what like the right number is, right percentage is, but as you can see, I'm on ledgerx.com. You have to sign up for this. I guess it was bought by FTX. FTX is not a US legal site, but this is good to go. CFTC has regulated it, and so yeah, to different ones you're gonna have to have cash or Bitcoin or Ethereum, depending upon what you're gonna do. Um, if you're going to buy a put, you're going to have to be willing to put up Bitcoin because you're willing to sell that Bitcoin at that strike price. Um, Call, you're going to have to put up cash. So that's the only other thing that would differ from like Deribit. Um, but say you're looking overall just to, we're making bearish divergence, you're looking to hedge just your Bitcoin portfolio. We're just going to do Bitcoin right now. Um, so generally, in traditional stock markets, I look out like 3 to 6 months. In crypto, things are a little bit sped up. So I'm gonna look 6 to 8 weeks. Um, so right now, I'm probably looking for somewhere early January. Um, December 31st, 2021 would be the end of the year. Um, right now, the spread's pretty big. So you want to find the ones with liquidity as well, which is hard. So it's showing me how many contracts are sitting there on the bid and the ask. So the liquidity that's there. So November 21st, that gives us a couple weeks. See if I can find anything better with more liquidity. I'm kind of far. I only have 40,000 to I think 80,000 is my max range. So there's more ones up there, but with Bitcoin price being at 62,000, something like that, um, generally you're looking at I'm generally looking to protect myself with about a 30 delta. Um, I know not a lot of people knows what that means. It's going to move. Basically, that's the odds that Bitcoin's going to reach that price prior to this expiration of the option, and also how much your option should move per $1 movement in stock. So a 37 delta, the dollar movement in stock, Bitcoin should move 37. The dollar movement in Bitcoin, the option should move 37 cents. The other Greek's going to change it around, especially as time gets closer, but we're not going to worry about that. Um, but say we were just a little hesitant on where we're at right now. Say we drive up again and get to 65,000, something like that. And we want to go ahead and buy this. So you'd go up in $160,000 put. Um, I think one contract equals one Bitcoin. Um, so on some of them, you might have to move a little bit further down if you don't have that much money in the market. And that's kind of a close at the money strike. So you can move a little bit further away. Um, this one would be about 2 to 3 thousand per Bitcoin, and it protects you below $50,000, but prior to December 31st, 2021. But as price moves towards there, the delta is going to get higher, and if things got more volatile, things are going to go higher. So, um, that could be something that you could protect yourself with a 20 delta put there. So we go higher, thousands. So for like these, you'd have to put up. I want to say you have to put up Bitcoin to sell short as well. So I don't know if I can do both at one time. If I want to sell short the $100,000 call by December 31st, 2021, the mid price is 29.15. Pretty good volume on that. The 28.51. So I can turn around and pretty much buy the $50,000 put, and it's not going to cost me anything. I'm going to have to give away my Bitcoin if price reaches $100,000 prior to December 31st. But if price goes down from here at 63,000, I have a 22 delta here and a 20 delta here. So my Bitcoin might start dropping, but those are both going to be negative delta. So going up, I have basically one delta or 100 delta, however you want to look at it, on the positive side. So these are both negative. So I'd have negative 22 delta and a negative 20 delta. So with all things remaining the same, without time decay, without any of that stuff, for every dollar that Bitcoin drops, you're only going to lose 42 cents. And if there's a bigger drop down, then this is basically going to cover you for everything, as you're not paying anything for this. And you're risking about 20% to the downside, and to the upside, you still have, there's still, over 50% to the upside with not quite that much, but well, yeah. So great way to hedge off that trade. Like I said, if you want to buy a call or a put on this site, if you want to buy a call that's out of the money, you're gonna have to put cash on there. Same with buying a put that's out of the money, I believe. Now, buying a put with out of the money, you need to put on Bitcoin. If you want to sell a call, you need to put on Bitcoin. And if you want to buy or sell which you would never do, short and out of the money, short any put, you would need to put up cash. So really the only time you're going to do this is doing a covered call with Bitcoin, but that just covers you through December. If we're looking at a little bit longer, and we can go ahead and end this one. So that's just buying a put to cover your risk on Bitcoin using Ledger X, which is legal to U.S. citizens, and then a little more into selling a call to use that money to buy a put, which I might cut up.